So good evening, Excellencies, ladies and gentlemen. It's my great pleasure to welcome you to the World Ahead 2026 Sofia Gala dinner, brought to you by Economist Impact. The theme of our evening is Bulgaria in the Eurozone, charting new paths for the country and the region. My name's Joan Hoey. I'm a Europe consultant at the Economist Group, and I am your compere and moderator for tonight. And we're going to have a wonderful evening, hearing insights from our esteemed speakers, being challenged by our World Ahead quiz, which you will find on your tables, enjoying cocktails, sparkling conversation, Michelin star cuisine, and on-stage entertainment from an award-winning guest. I would like to thank our sponsors who've been so important in allowing us to be here tonight. So our thanks go to our gold sponsor, Telelink Infra Services, TIS, our silver sponsor, Arubis Bulgaria, our bronze sponsors, Geotechnim and EOS Matrix. Now, before we start the official proceedings with an address from the President of Bulgaria, I will spend 10 minutes or so giving the Economist outlook for Europe and the region, just to set the stage, so to speak. So let's start with the slides, which should be appearing on the screen. Okay. Let's go to the next one. Right. So if you look at this, we're looking at big tectonic shifts taking place in the world, and primarily what we're talking about is geopolitical and geoeconomic developments that are confronting Europe with a set of major challenges. What we're seeing really is an intensification of great power competition, especially that between the US and China, together with major shifts taking place in the energy and tech spheres. And all these things have exposed Europe's weaknesses on several fronts. First of all, these shifts are eroding old alliances and raising questions about Europe's economic, political, and military standing and role in the world. To be more precise, they are exposing Europe's lack of economic and technological competitiveness, the lack of strategic autonomy, and an inability to guarantee its own security. We'll go to the next slide. As things stand, and as the Draghi report has highlighted, the productivity gap between Europe and the US has widened rather than narrowed since the 1990s. That wasn't meant to be the case. It was meant to be a story of convergence, of Europe catching up with the US, but the reverse has happened. So if we look at EU productivity today, it's about 20% below that of the US. There's an even bigger gap in terms of GDP per head, with EU GDP per head being about 75% of US GDP per head. That's measured in PPP, purchasing power parity terms. I'll talk in a moment about how Europe is finally trying to address this, but just to say a few words about the growth outlook for Europe both in the short and medium term. I guess the thing to say is that even the medium-term growth outlook, even if we see an acceleration in growth in the coming years, those growth rates are not going to close the gap. Europe really needs a technological or demographic or other kind of revolution to deliver catch-up growth and close this productivity and wealth gap with the US. Just in the short term, the growth outlook is rather lackluster, and that's in large part because of these rapid changes in US trade policy. We've seen this US-China trade war raising uncertainty, damaging business and consumer sentiment, and weighing on investment. Growth in Western Europe is going to be weaker than in Southern Europe. So actually the Southern European economies, which fared very badly after the global financial crisis, are now actually outperforming the leading European economies. I'm talking about Greece and Spain and Portugal, Ireland, of course. Not in Southern Europe, but part of that group, obviously, that suffered in the aftermath of the global financial crisis. And if we look at Central and Eastern Europe and Southeast Europe, this region, growth has been outperforming the Eurozone or the EU average now for some years, and will continue to do so over the medium term. And, you know, amongst those, Bulgaria was one of the top performing economies in terms of growth in 2025. We haven't got the final figures, but it's above, well above 3% real GDP growth. So well above the kind of Eurozone speed limit of growth. And we're looking at growth above 3% or around 3% in 2026 as well. So how, next slide, how might Europe address this problem? Well, Germany has embarked on a new course. We see a surge in investment pumping into defense stocks in Europe, which is facilitated by new EU funds, this fiscal U-turn in Germany, and efforts to prioritize procurement within Europe. Large sums are going to go into German infrastructure, which typically has large fiscal multiplier and creates spillover effects for Central Europe. So Central and Eastern Europe stand to benefit from that. I think much will depend on the timeliness of this new German fiscal spending and how much of this goes into productivity enhancing investment with this strong growth multiplier. So we don't expect the effects to be felt until mid-year, mid-2026 at the earliest. And there are downside risks as well in terms of the potential economic impact due to the underwhelming levels of truly new or additional investment spending that has been planned so far. Just on to the next slide, and other challenges for Europe. Trade risks clearly remain quite high. We've already seen what happened in 2025, where US trade policy and the threat of tariffs resulted in this front-loading of European export growth before the tariffs came into effect, and that was followed by a kind of crash later in 2025. So what we've got is these 15% US import tariffs on goods, including cars and chips and pharmaceuticals, and 50% tariffs on metals, and which is obviously going to curb EU growth, export growth, with Germany being the worst affected. And of course, the US has threatened further 10% tariffs on some European economies after the Greenland controversy, and so that will increase uncertainty in the near term. I think in terms of trade patterns, future trade patterns, what we will see is a shift with permanently lower exports to the US, but we will also see a diversification of EU trade and exports to other markets. We'll see new free trade agreements coming into effect, starting with the EU Latin America Mercosur bloc, which will gain importance. The other thing that's happening, of course, as a result of US trade policy is that Chinese goods that the tariffs have priced out of the US are being redirected to new markets, including Europe, and this is going to intensify competitive pressures, undercutting some producers, and it could even lead to some new EU tariffs on China. I suppose the upside of all this is that consumers will benefit from cheaper imports, lower inflation, and the reduced cost of credit. Which brings us to the next slide. We're looking at inflation and interest rates. One positive, I guess you can say, is that private consumption growth in Europe is going to be driven by lower interest rates, continued disinflation, and the latter, disinflation, is happening due to a number of factors, including the US tariffs, the strong euro, and the rise in Chinese imports. Moving quickly on, I do want to talk about Bulgaria and the outlook for Bulgaria and this region of Eastern Europe and Southeast Europe. So, as I said, Bulgaria has been one of the fastest growing economies, EU economies in 2025. We expect that to continue this year and over the medium term. What will be the main driver of growth? I mean, it still seems to be the case that will be private consumption. We expect external demand to stage something of a recovery at some stage, and we anticipate quite strong investment growth over the medium term too. I suppose the risks to medium and long-term growth for Bulgaria include deficiencies still in infrastructure, the institutional environment, and obviously the demographic headwinds. Just the next slide is just showing you what's happening with inflation. The expected outlook for inflation is going to continue trending down in Bulgaria, as in much of the region. So it will trend down, but it will remain above pre-pandemic levels. So price levels are going to remain much higher than they were back in 2019, and so households will still be feeling that in their pockets. The next slide, just giving you a picture of the kind of fiscal or public finances in Bulgaria. Anchored in the EU, Bulgaria has a strong fiscal framework and one of the lowest public debt to GDP levels in the bloc. I already mentioned, next slide, the demographic challenges. The demographic outlook is not benign. There's a long-term trend of population decline in the working age population, which obviously presents challenges for the budget, for the state budget, for fiscal outturns and spending in particular on social security and welfare payments and so on. Some good news is that we are seeing reverse migration happening, a positive fertility rate, but not enough to arrest the overall decline. I want to finish with the final to talk about whether a new growth model is needed for Bulgaria and for this region. It's something maybe we will address in the discussion. In general, I would say that growth here in this region remains fairly resilient despite this turmoil in the kind of global geopolitical environment. We do expect the region to outperform the West European economies, but this region will also face weaker momentum, greater exposure to global trade and competitiveness pressures. Private consumption growth is likely to slow in many places compared with recent years, because there's been this exceptional real wage growth, which has fueled household demand. We see something even of a consumer credit boom here. We see quite strong increases in consumer credit, in mortgages and so on. So that's something to watch. And I think increasingly, as we look to the future, sustaining growth is going to depend much more on investment, both public and private. And that's public investment will be supported in the near term and has been by the EU funds, which will be an accelerated drawdown up to the deadline in August this year. But the critical uncertainty, I think, is about private investment. We see some problems maybe with labour shortages, rising unit labour costs, stagnant productivity. That's eroding competitiveness in some countries in Central and Eastern Europe. So to remain viable, businesses, firms have got to invest in automation, in digitization, in AI-driven productivity gains, and on that basis, the growth outlook will be more positive. I think there's a potential upside also from the end of the war in Ukraine. When it comes, it could deliver a boom. It could unlock reconstruction, FDI, supply chain investment across neighboring countries, including this country. But I think in future, when we're looking from Sofia and this region at where growth is going to come from, what it will be Bulgaria's role within the division of labour in Europe. When we're looking at future EU funding, it's going to be much more about, not about convergence, it's going to be about a strategic alignment, governance, security priorities, and countries that have strong institutions that are closely aligned with EU objectives will be best placed to benefit. So I think for businesses, the message is clear that the old growth model really is not sustainable over the medium term. Competitiveness is going to hinge on productivity, enhancing investment. And I think that means for policymakers, the task is to encourage private investment, FDI inflows, safeguard fiscal credibility, and ensure that defence and EU funds support long-term growth. So overall, I think the outlook potentially is very favourable for this region, but success is not guaranteed. The next growth phase has got to be investment-led, productivity-driven, and far more sensitive to policy choices and geopolitical outcomes. And I'm going to end it there. I hope I've given you a kind of brief overview of how we see things in the region. And without further ado, I would like to invite the President of Bulgaria, Iliana Iotova, to come and give her keynote opening address to this esteemed gathering. Welcome.